All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. Let's go take a look here at MRO and then let's go get into another trade. MRO here, it's been a wild day, right? Opened up, fell, was down about a buck 10 at one point, rallied back. We talked about this 37 support area and it overshot it. It's come on back above 37. Still a good sign, still in a bullish position. Nothing has changed on that to make it bearish. And that's the way a lot of the stocks are here today. Those that have been triggering bullish are remaining bullish. Those that have been triggering bearish are remaining bearish. We're not seeing a lot of triggers flipping another way. So something like Honeywell, which triggered bullish, is still bullish. Yeah, does it have the potential to pull back? It sure does, but there's no bearish signal coming into this. Where something like Google, does it have a bullish signal? Yep, just kind of continuing with some of the bullishness that we've seen overall. Perhaps Apple is one of my favorite trades out there on the board here right now to the upside. I can't really do it for the challenge unless I get out of some MRO, and I don't like that. But to get a good option on it, I could go uh, to a little more risky type option. But the setup here on Apple is absolutely fantastic, above 522. Perhaps my favorite trade on the board. And if we had more money in the challenge, I would go after it. The trade I'm going to go after here is Deere. Okay, John Deere. John Deere factory or tractor maker. Okay, industrial. John Deere, we talked about their earnings last week, and the earnings they were a little light on some of the top line numbers, but overall revenue, or excuse me, overall net income growing. This has been a stock that has been consolidating for a long time now. It has been 1, 2, 3, 4, 5, 6 months. And generally, the stocks that consolidate the longest tend to have the biggest breakouts. And as we head into the end of the year here, with Deere, with its earnings, it had its earnings. It popped, it dropped to retest some of the gap, and has continued on higher. And so this is kind of a post earnings continuation. We're looking for the breakout here, and we'll use 84 as our stopping point. We move below 84, we know we're not getting that breakout that we want. A move above 85.50 would give us greater confirmation. So it's in a real nice risk reward standpoint right here, where we're looking at about a 87 to $88 price target on the breakout move here for Deere. Okay, so the options that I'm going to use here for Deere, before I go show you those, I want to show you a weekly chart on Deere with the Trend Rider Bull happening here. With Deere, you can kind of get an idea of what this consolidation's been like. We have the big volume suggesting that we get a nice little breakout here. Even if we come down into an hourly point of view, where we have the gap up, the pullback, now we've been consolidating, holding around 84 and a half. This just has a good risk reward built into it. Will the trade definitely work? Well, no. I mean, there are some bearish arguments for Deere, and if the market falls apart, we could see Deere fall apart. But overall, the signs are pointing with some of the break with the gap on earnings, the piercing of the upper band. The signs are pointing 87, 88 here for Deere. So I'm going to go after these options here. The December 85, the normal December 85 calls on Deere. Okay. And they're bidding at 125 to 128 right now. These are slightly out of the money, about 20 cents out of the money. Okay. We get that kind of move up towards the 87, 88 area. We're going to be looking at these options being worth $2.50 to $3 at that point. So a pretty good risk reward scenario here. because I don't have a ton of money to play with, I am looking at these and saying, well, in fact, I'm going to fill here at $1.29 before I talk anymore. So Carl can send that trade out. So we're filled 6 contracts at $1.29 for the Deere December 85s. Okay. Okay. So we bought 6 contracts on the DE calls December 85s. Okay, December 85s. I apologize for the lower volume here. Not quite sure if anybody else having the same issue. Okay, so the December 85s. These things make sense between about $1.20 and $1.40. The risk reward isn't changed dramatically. $1.20, $1.40. So there's plenty of room as far as getting in. We're doing 6 contracts, so $1.25, $1.27, $1.29, $1.31. It just isn't that big a deal in terms of the challenge here for Deere. All right, so we just made a trade for the challenge. We bought some Deere calls, okay? Some Deere calls, the December 85. And these are the normal Decembers that expire the third Friday of December, okay? So we have a few days out on them. These December 85s, we bought 6 contracts, okay? Look at the open interest. We're talking about 13,000 on an open interest standpoint. We're not talking about anything that that is too small for us to tackle here. Anywhere between 125 and 140, we're talking about a good risk reward price here for Deere. We're looking for a breakout up into the 87 to 88 range. Why that range? Well, simply because the consolidation overall has been about a $3 consolidation. A breakout we'd be expect to be about a $3 breakout. It's a very crude technical measure, and chances are that Deere does go higher than that initial breakout target simply because of how long it's consolidated. But that's kind of the initial target that we're going to play with here for Deere. Breaks below the 7-day moving average, we'll look to exit here the Deere position, so about 84. So we have about 30% risk on the trade. And depending on how fast it gets to the 87 or 87 and a half, 88 area, we're looking at 100 to 150% on the upside. 90 would be a real conservative estimate. So we have a pretty good risk reward model here on these Deere calls. Okay. Okay. All right. So our cash is in play. Like I said before, I like Apple. Love the setup here on Apple. Love it. I've been talking Apple above 522. Beautiful setup, but I don't have enough money in the challenge to be able to really mess aggressively with the Apple calls. I'd have to almost get 2 out of the money, deal with something like the 535 strike or into some of the weeklies. And I don't really want to mess with weeklies on Apple simply because if it continues to consolidate, then we're hosed there. But I do like Apple higher as well. Deere offers just a little better reward potential on it for the options that we were able to get into. We are still in MRO with no plans of leaving here today. It's pulled back about 50 cents. We've suffered about the dollar pullback here. The nice thing about suffering the dollar pullback is it allows us to set our price target a little higher. If it does start to turn back around to the upside, the question that I always ask with something like this though is, okay, what's worst case scenario? Where's enough with MRO? And kind of enough if we start to have a day or two where we close below 37. I don't expect for there to be a sharp sell off into the 36 area, but if we were to break 36.50 pretty quickly, we'd probably just pull it and move on into something else at that point. But right where MRO stands right here. We talked about it this morning down here around 37. It's a great upside entry point, and we do expect it to make its charge back. All righty. Which option on Apple would I have done? Yeah, with Apple, the option here that I was looking at was the December 530. Um, but I couldn't get it in the $7 range, which is where I would have to be for the challenge, about 770. He's trading up around 890. But if money wasn't an issue, I would play Apple with the 520s, the December 520s here, and maybe even go even more conservative with something like the 510s and right because I think Apple moves into the 540, 545 area. So if you're paying $10 in implied value, yeah, you're still not getting a great upside. So I'd probably come even deeper into the money here with these December apples. I could have done the minis, right? I mean, could have used the minis on Apple. That wouldn't have been a big deal. But those are kind of what I was looking at, and really couldn't get overly serious about those. This is almost a time where a spread actually makes sense. Not having a huge upside target, but you can kind of do some sort of call spread on them. That they actually start to make a little more sense. And those of you know, I'm not a huge call spread fan, but there's a time and a place for them. And with Apple, I can't argue there. Okay. All righty. All right. Well, we're in deer. Okay. We're in some deer calls here. This isn't anything I expect to start working or failing here today. I don't really expect it to move too much into the close, maybe 20, 30 cents either direction. This is just something I would expect to kind of bleed up on light volume here as the week progresses. Those of you who follow deer, okay, you know that deer doesn't move relative to the market and market futures. Okay, the market S&P could be up 1%, deer could be down 2. The market could be down 2%, deer could be up $3. The correlation between the broader market and John Deere is very, very small. And so this is something we're playing the deer chart, the deer post earnings, not necessarily playing the broader market there. Okay. All righty. Well, thanks for hopping on. I'll turn you over to Carl here for his top three here for the rest of the day, and we'll continue to monitor MRO and Deere. Don't expect to make any changes to those here today. Probably not any changes into them into tomorrow unless we get something weird or crazy happen for or against us with those trades. Thanks for hopping on, and we'll talk to you later. Take care.